Aditya Khemka, fund manager at InCred Asset Management, with us this morning. Aditya, great to speak with you as always. Just, trying to get a sense that is the concern what Trump has said or what he could say. Let me clarify. He said 100% tariffs on companies that are exporting or importing into the United States branded pharmaceuticals without any manufacturing facility. Logically, not too much impact on India, but that's not what we're seeing.
Yeah, so look, good morning and thanks for having me. I think the issue that we are noticing in the Indian pharma stocks is that many of these export to the US and, earlier the entire pharma space was exempted. Now there is branded and patented that is getting taxed, whereas the other part of it is exempted, the unbranded and the generic is still exempted. So I think investors at some point are saying, look, we are getting tired of this and we don't know what the future holds. And hence, to discount that risk or to discount that uncertainty, the stocks need to fall so that the reward for the potential shareholder goes up. And that's when you will see some buying coming into the stocks if the stocks sort of dip significantly from where they are today.
Good morning, Aditya. And so therefore, on balance, how would you approach something like today? And I know that you wouldn't worry too much about one day or the other, but if you are looking at a long-term structural story and you believe in a certain direction for a pocket maybe of these pharmaceutical companies, when the entire space is getting tarred by the same brush, which is maybe not the right way to look at it, would you look at opportunities, and where would those opportunities lie?
So within the pharma space, I'd be more keen to look on companies that focus more on India and hence are relatively insulated from whatever is happening in the geopolitical scenario with US. I would also be inclined to look at CDMO companies that do business with the global innovators like Pfizer, AstraZeneca, GSK, Amgen, because they will also probably be, insulated from this geopolitical situations that we are encountering these days.
Good morning, Neeraj here, and just trying to think, would the non-sun pharmaceutical branded generic companies, would large dips into them be an opportunity for tactical buys? I know you don't have them in your portfolio, but just trying to think out loud.
Yeah, there could be tactical buys, yes, but two things need to be accounted for, Neeraj, as we stand today. Number one, most of these non-sun generic pharma companies have exposure to Revlimid, and Revlimid is going off next year. So these companies will have a very tough time showing double-digit bottom line growth next year. So that's factor one. Factor two, valuation multiples obviously are, on the higher end of the historical sort of band. And number three, now you have this potential risk of a tariff which never existed earlier. And hence, the historical band valuation multiple should not hold, because historically you do not have this risk built into their valuations. So if you take these three factors together, can it be a tactical trade? Yes. But at what price? I mean, it has to be significantly below where the stocks are today.
Aditya, the other question that a few industry experts just wrote was that CDMOs, do they remain in an uncertainty zone, because the definition of the drug manufacturing in the US not clear as of now, whether they extend to the entire value chain, etc. And therefore, could there be at the very least pricing power and maybe some more damage if indeed across the entire value chain? I heard you say that you are constructive CDMOs.
So, Neeraj, look, if you are imposing tariffs and if you just think about, how do you impose tariffs? One way to do it is to just put it on the final product. Wherever the final product is getting manufactured and it's getting imported, that is exactly the point of tariffing, right? But if you start putting it on intermediates, on raw materials, on, other phases of production other than the final product, then you will have a situation of multiple tariffing, right? So let's say raw material A is exported from Europe to US, where it is converted into API, then it is exported from US to India, and then where it is converted from the API to final product, and then again it is exported to the US. Now in this situation, how do you sort of manage the tariffs, right? So because that is how integrated the pharma supply chain is. So the call that we are taking at this time is that it is probably going to be just the final product that is going to get tariffed, and which is where the CDMOs are relatively insulated, because they don't deal with the final product, they deal with more the intermediate products in the supply chain.
Aditya, just trying to understand big picture. One, is there a contrarian play on pharmaceuticals this morning? as things start looking, a bit hazy? Second, then which of the spaces or which of these companies would you look at positively? Because while all of this tariff business is going on, the fact is that you've had some very good news in terms of innovations from some Indian pharmaceutical companies as well in the recent past.
Yeah. So if you think about it, the companies which have had good news on innovations, these companies are considered valuable because these innovations are aimed at selling into the US, right? And it is the US which is basically acting up. So hence, I would say that part we need to be worried about that part. Companies which are innovating, market is obviously extraordinarily rewarding them. And if the tariff situation or if these, make in America kind of things play out, then the economics will not be as good as they otherwise would have been, for the innovative products. The second part is that, if you look at today's stock price movements, CDMOs, hospitals, branded generics, diagnostics, everything's down. Now, none of these have any meaningful exposure to the US, right? So that's where the opportunity is. You're just getting to buy the same business at a lower price because these companies are, one, services businesses. Number two, they have no exposure to the United States.
Yeah. Uh, always a pleasure speaking with you, Aditya. Thanks so much for taking the time and look forward to our next chat.